Today, we will talk about comprehensive overview of trading. The term trading is simply referred to as buying and selling securities to make money on daily price changes. If you want to trade in the share market, you should have a good grasp of the fundamentals of share trading. Investing is very much essential these days, as savings alone is not adequate to beat inflation and fulfill all our financial goals. There are several investment opportunities available, and you can choose them as per your needs and convenience. It involves vigorous participation in the financial markets in comparison to investing, which primarily works on a buy and hold strategy. Types of trading. Scalping. Scalping is also known as micro trading. Basically, it is a subset of intraday trading. It is a trading style that specializes in profiting even with small price changes. It can be done several times in a day. Even though all transactions don't yield profits, and in some, a trader's gross losses might exceed the gains. Thus, it requires a strong exit strategy for the trader to ensure that he does not incur large losses, which can nullify his previous gains. In this case, the holding period of the securities is shorter compared to day trading. This requires market experience, proficiency, awareness of market fluctuations, prompt transactions, and strong mental resolve. Day trading. This form of trade involves buying and selling stocks in a single day. A trader involved in such trades needs to close the position before the day's market closure. Day trading requires proficiency in market matters and a good understanding of market volatility. Therefore, day trading is mostly practiced by experienced investors. Swing trading. This form of trade is used to capitalize on short-term stock patterns. This style is used to earn gains from stock within a few days of purchasing it. In swing trading, investors primarily stick to technical analysis. Momentum trading. When stock price moves upward for a certain duration of time, they are said to have gained momentum. In momentum trading, the traders attempt to profit from this price move. They take position with the aim to sell when the peak is reached. Here, you might have to wait for a few hours or days to earn the desired profit. Moreover, the idea is to purchase stock in large quantities to earn substantial gains. The stock market stocks. A stock, also known as equity, is a security that represents the ownership of a fraction of the issuing corporation. Units of stock are called shares, which entitles the owner to a proportion of the corporation's assets and profits equal to how much stock they own. Stocks are bought and sold predominantly on stock exchanges and are the foundation of many individual investors' portfolios. Stock trades have to conform to government regulations meant to protect investors from fraudulent practices. The forex market. The foreign exchange market is where currencies are traded. This international market's most unique aspect is that it lacks a central marketplace. Instead, currency trading is conducted electronically over the counter, OTC. This means that all transactions occur via computer networks among traders worldwide, rather than on one centralized exchange. Cryptocurrency? Cryptocurrency is a digital payment system that doesn't rely on banks to verify transactions. It's a peer-to-peer system that can enable anyone anywhere to send and receive payments, instead of being physical money carried around and exchanged in the real world. Cryptocurrency payments exist purely as digital entries to an online database describing specific transactions. When you transfer cryptocurrency funds, the transactions are recorded in a public ledger. Cryptocurrency is stored in digital wallets. The first cryptocurrency was Bitcoin, which was founded in 2009 and remains the best known today. Much of the interest in cryptocurrencies is to trade for profit, with speculators at times driving prices skyward. Scalping. Scalping is the most short-term form of trading. Scalp traders only hold positions open for seconds or minutes at most. These short-lived trades target small intraday price movements. The purpose is to make lots of quick trades with smaller profit gains, but let profits accumulate throughout the day due to the sheer number of trades being executed in each trading session. Day trading. For those that are not comfortable with the intensity of scalp trading, but still wish to hold positions overnight, day trading may suit. Day traders enter and exit their positions on the same day, removing the risk of any large overnight moves. At the end of the day, they close their position with either a profit or a loss. Swing trading. Unlike day traders who hold positions for less than one day, Swing traders typically hold positions for several days, although sometimes as long as a few weeks, because positions are held over a period of time to capture short-term market moves. Traders do not need to sit constantly monitoring the charts in their trades throughout the day. Importance of risk management. Risk management is an important process because it empowers a business with the necessary tools so that it can adequately identify and deal with potential risks. Once a risk has been identified, it is then easy to mitigate it. In addition, risk management provides a business with a basis upon which it can undertake sound decision-making. What do you think of our video? Let me know in the comment section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.